Is my microphone low? Yeah, I'll be recording this. So if you guys want, if there's any trade on the 1K channel that I took in the past 2 months and you have questions about, I'm going to try to go over it here on TradingView. But if no one asks anything, I'm just going to, I guess, cherry pick. The idea behind Amazon. So if you're talking about the trade on Thursday, what was that here? Oops. So that trade played out. It was supposed to be our 15% move, and then here, let me show you something. So we always start the longer time frame. Where were we? Let's go into 1 minute. So for that Amazon trade, when I called it out, I believe it was around here. We had a sweep on the 1 minute low, and then we had a market structure shift, and then we closed above that, this quick imbalance. But the next target would have been just this swing high. So with options, this would have been a 50% move. This would have been a target. I unfortunately did not call it out that day because we had some issues with the server. But after that trade, if you notice on the 5 minute, this was also a market structure shift to the bottom because we closed below these 5 minute candles. And then we targeted that 5 minute for the sweep and we reversed. And then you could have targeted either the bottom this hourly or the low. So there could have been 2 trades in Amazon, but that was a short-term play. With the 1K challenge, a lot of the trades, they literally last like 10 minutes, 30 minutes. Yeah, it was 50%. I think I just had this 5 minute marked out. So like 205.4. But once again, like the trades really depends on what time frame you're using. So if you're on a 1 or 5 minute, this would have been a short-term trade. But if you're looking at the longer time frames, you could see. So this was the hourly, that same day. On the hourly, we had this massive bearish fair value gap, and then in the morning we actually swept the pre-market high, and we closed way below it. So if you had a longer bias, this would have been a good short here. 15%, sorry. For every trade, I target at least 10% because you only need to make 8% a day. And then obviously with like compounding, you can hit that 25K mark in like less than 2 months. Yeah, 8% of the total capital on that account. So for this one, for example, I started at 1,000, and so for this day in particular, my target would have been $1,080. But so when I start with 1K, my risk is a lot higher than when the capital grows. So for right now, when I restart this challenge, probably the first maybe 3 to 5 days, the trades will be a little bit riskier until the capital grows. Then once I'm around 5K, I would like allocate like smaller sizes to the positions. Does that make sense? Because sometimes seeing only $80 gains is not like psychologically you're not gonna be pleased with it until you're like start making like over like $200 a day. But nonetheless, I mean, even with 1K, you can still make like 25% a day. Can you review your QQQ 508 call from March 3rd? And why did you take 1 DTE instead of 0? 3-3. 3-3. Where are we today? So that was a Monday. I'm assuming this was here. Let's go back and see the trades I took. I'm assuming you're referring to this one. Okay. 508 calls. This was at 10:26. So let's go into 5 minutes, see what happened. Let me just zoom out. 10:26. All right, so for QQQ, this is what I saw. So this is the 15-minute time frame, by the way, and this is the 5-minute. We had this imbalance here that got wicked into, and we touched this order block right here. But this 15-minute closed within, and then if you zoom into the 5-minute, I think I called out that as soon as this 5-minute closed above this fair value gap, I'm going to take this trade. And as you can see, 10:26 is when I marked it out, and this would open at 10:25. Then I pull a sell above 509.22, which actually I still have the line right here, which would have been just this 5-minute wick, and I think that also would have been basically the open of this bearish 15-minute. So like in 10 minutes, I think this got you like 15-20%, just because of this quick 5-minute closure. It doesn't say a timestamp of when I sold, but it was less than like 20 minutes. I mean, the next trade we took was 30 minutes later. Is there a way to copy your trades? I mean, I started streaming Robinhood Legend, so you can see like my exact entries and the same amount of contracts I'm taking. I think the owner of After Hour, they're working on a feature to copy trade, but I would highly, I don't know, to me, that's kind of weird. And I'm kind of uncomfortable people like just copying trades blindly, unless you're doing like a very, very small like size. I think it's better if you like learn and like taking a trade yourself, especially if you're scared. I mean, just do smaller contracts. Like a lot of people ask me like, do I need 1K to start the challenge? You could technically start with 100, 500, whatever, and just like the size of the contracts will just like, for example, if I take 4 trades, you can just take 2, or 4 contracts. I mean, you can just take 2. Can you elaborate on how you identify the swing high there? Yeah, so swing highs are basically just areas of quick stops. So all of these wicks are areas where retail traders have their stops. And I usually just target the first noticeable one. Like people that shorted this probably just have a stop here. We grab their shorts and reverse. And this works in all time frames, 5-minute, 15-minute, hourly, daily. Do you mind suggesting resources to learn chart reading? Honestly, the best way to learn is just looking at the charts. Like it's gonna take hours and hours to basically understand like what happens with the candlesticks and in every time frame. I would highly suggest working in the multiple time frames, at least 2, and use them congruently so you can see like what happens. A lot of people just like tunnel vision on the 1 minute and they don't see like the larger picture and what's happening. But there are some PDFs and books I will be sharing soon, basically on candlestick anatomy, so you can like understand like what happens when we get like a bearish engulfing candle like this. But I have talked about this in my previous streams. Hold on, let me scroll up. There's a lot of messages going through. Can you briefly explain the basic concepts of market structure shift sweep with an example? Sure. I think this is a good one with Apple, I believe. Yeah, this was Apple. All right, this was 227. So let's start with an hourly. 227. That was right here. It's going to 50-minute. All right, two things happened, and I even marked it out too before the price action delivered. So this was the 5-minute. No, sorry, this was the 50-minute chart that I had marked out, as you can see here. But there was a fair value gap that I had marked out right here. And the reason I marked this out, so this 5-minute candle, since it engulfed the previous candle, but not only did it engulf it, but it took out liquidity right before. So to me, this fair value gap is really significant because of what happened. So we swept the pre-market low, the 5-minute engulfed the previous candle and caused an imbalance. This would be a really, this is like a solid entry right here. And then usually my stops is any 5-minute close below this fair value gap. And if you notice, we literally just wicked it, but we closed within. So I remember there was actually one guy that was taking this trade with me, and he actually got stopped out right here because he thought this was gonna break. But I told him you have to wait until the 5-minute closes. If you would just waited 2 minutes, it instantly reversed. So I usually have mental stops and I wait for the candlestick to actually close because wicks are just to stop retail traders out. Like if you were watching this live and you saw this 5-minute candle like print below here, this probably shaking out a lot of traders. And then I literally just put targeting above 241.1. That was just the first 5-minute sweep I saw. And this was an instant 25% move in literally I think 15 minutes. So does that make sense? The way I trade is you wait for some liquidity, a market structure shift, an imbalance will form, and this will be a retest. I noticed I don't use many indicators. Is there a reason why? I don't use any indicators, period. I mean, I have this fair value gap, but this is usually just for people to monitor my streams, but I don't use indicators. Indicators, if not all of them, are all lagging. And the fact that they're all free, basically every single retail trader can use it. So it wouldn't make sense for them to work 100% of the time, because then who's the ones making money and who's losing money? You know, if indicators are 100% valid, wouldn't everyone be making money? It doesn't make sense. And my first 4 years of trading, I was unprofitable, and I had a bunch of indicators in my charts: MACD, RSI, VWAP, you name it. And I think knowing how the market actually moves, you know, just marking out your own imbalances, your fair value gaps, finding out where liquidity sweeps are, because this is what causes market move. We go from liquidity sweep to liquidity sweep. Look at for example, this was an Apple on February 27th. We swept pre-market high, swept pre-market low, all within the first 30 minutes of market open. Retail traders got stopped out here. Retail traders got stopped out here. The market just moves from liquidity points into imbalances. That's basically it. There's no need for indicators. Do you watch level 2 order flow to decide what to enter a trade? No, I do not. I used to. I mean, it's good for I guess confirmation in some trades, but since we're trading options, it's not as necessary. I do watch on futures though. Trading volume comes into play, right? As well as hammers, inverse hammers. Yeah, volume definitely comes into play. I bet you if I actually mark this out, hopefully this works, because sometimes it doesn't work. If I mark this out right here, let me extend this actually. So this is from 9:30 all the way, let's go till right there. So here I see two areas of resistance, basically like this chunk right here between 241 to 241.5, and then we have another area of resistance here. But usually if we break above this and then instantly reverse, this would be a good area to short, and we retested a second time. And then below this, you can see the volume got extremely low. So if we break this with strong momentum, which we did in this candle, it's just gonna flush. Are you planning to announce entry and exit limits in both the challenges? Yeah, I will. With the 1K challenge, I mean, I think I marked them out like 95% of the time. I probably only like 2 or 3 trades I missed out calling on the channel because the moves are too quick. If you watch my previous stream, I think I even called it out. It was either on QQQ or Apple, or like I market shorted it after like a candle closed, and everyone on the stream like got in, and like we were already up like 5%. But by the time I wanted to like type it in, yeah, I think it was Apple. By the time I type it in, like it's, you can still get in, but you'll just be missing out like 5%, 7% moves. Do you use most of your closes on the 5-minute? Yeah, most of my executions are on the 5 or 15-minute. What percentage is your mental stop loss? Usually about like 10 to 15%, depending on how heavy I am on the position. I think on this challenge, the biggest loss I had was AMD, which was, I believe, 20% of my account. But that one should have only been 50%, but I was stuck in a meeting. So I ended up let this slip. But even with this loss, this is another thing I want to talk about too in this webinar. I had a $4,100 loss in one day. 21% of my account was gone, but within 2 days, that was recovered. So I kind of want to, like, I mean, I'm trying to teach people to like get out of your positions even if it's at a loss, because if you hold this overnight and we get a massive gap down, this whole thing is you're gonna blow your whole account. So even 20% loss is not a big deal. It really isn't. The market has so many opportunities every single day. You can make it back, and hopefully this can be proof for you. How do you identify liquidity? Basically just areas where retail traders have to stop. So you can also ask yourself this: how many times have you gotten stopped out just for the market to like fully reverse? I bet you that's happened to you so many times. Just mark out those areas where you get stopped and pay attention to like what happens. So you can even like paper trade this. Like pretend like you wanted. Let's look at SPY. I mean, this is not really the best example, but let's just say you shorted this and your stop was right above the high. We literally just took it out 10 minutes late, 15 minutes later and reversed. So this is how you can mark out areas of liquidity. You just literally go at the wicks, or you can mark out like zones too. You can just get a rectangle tool and just like mark out an area where like retail traders have their stops. So if you had a hard stop right here, you would have gotten wicked out just for it to reverse. And this can be in every time frame, the 1 minute all the way to daily. If you watch some of my past streams, I usually start on the daily, especially with like the QQQ and SPY. Let's go QQQ. So on the daily and larger time frames, you can mark out this area and this area. These are like known areas where retail traders have their stops, and these can be good zones to reverse. And if you look at the next day when we swept this, look at this like 50% retracement we got. But obviously you have to wait for confirmation on shorter time frames. But if you mark out liquidity points in higher time frame, your trade bias will be a lot better. All right, I am 200 messages behind, so bear with me. What's the difference between a wick and a candle? I'm assuming if you're asking that, you're extremely new to trading. Every single one of these is a candle. I feel like I shouldn't even be teaching this. This is like very beginner stuff, but I'll mention it. A candlestick is basically any one of these candlesticks that form on like any time frame, and then a wick would be a price movement that happens, but it reverses. So this would be on a daily time frame on the QQQ. We opened up at 527.88. We eventually move to 529.11, but we go all the way down later that day, and we close at 519.91. So this whole thing would be a candlestick. These little lines would be the wicks. Can you go over your general trading strategy? I did. I'm not sure when that message went through, but it looks like that was 15 minutes ago. Do you guys want me to go over any more trades? I don't know if you guys are going over this channel, but I kind of want to focus on these trades so I can show you guys like live, like my my thesis. And I'm sorry, I'm still scrolling down. There's a lot of messages to go through. Do you wait for retests after a market structure shift? Yes, ideally you can, but sometimes, especially recently, like the market has been so volatile, you can take an entry as soon as a market structure shift happens, and you can just like do a small position. So what was one I just marked out for you guys? Actually, let's just find one right now. All right. So here's one on the Qs. This is the 15-minute time frame. This right here will be the fair value gap. As soon as this 15-minute close below, you could have technically instantly, as soon as this 15-minute close, taken a short position. But if I were to do this, since this was a pretty big move, I would take a small position and then wait to scale in. So let's say I did one contract, I shorted instantly. Within 15 minutes, I probably would have made like, that's probably like a 30-40% move with options. And then your entry, like, or re-entry, would be at the entry of this fair value gap or at a 50% equilibrium, and then the stop would be like above the market structure shift candle that formed the imbalance. So let's say the contracts are about $100, and I had $400 I can use to get into this trade. I would mark it in one contract, so my position would be $100, and then I would scale in two more, or maybe I would scale in one more, let's say. So my entry would be a little bit better, and then I would scale in maybe near the top for another two contracts. So if you scale in slowly within this fair value gap, your entry will be a lot better. So to answer your question, usually you do have to wait for a market structure shift, or a retest, sorry. But you can still enter as soon as it closes below or above a fair value gap. I'm surprised you don't use RSI or moving averages. I mean, they're lagging indicators, and I don't like to use what retail traders use. I'm sorry, but for the swing trading account, RSI and SMAs are useful. If you want to trade something like a week or two out, and then I'll use SMAs. But anything short term, absolutely not. Wow, I've been yapping for 20 minutes already. That's crazy. What was the trade size on AMD for 20% loss? I'm honestly not sure. I'll have to open Robinhood and check. Because I don't think I called out my size here. Oh, I didn't even realize I actually had a swing play. Interesting. You need to tier that? Yeah. Definitely. Seriously, just take, if you're trading options, do not hold overnight, especially if they're near about to get expired. It's better to take a small loss than for you to blow your account the next day. That is, it's so important. Like, I hope you guys understand. Like, I started with this account at 1,000 and I brought it up all the way to 24,000. I can technically do 23 accounts now and blow every single one of them up and still be at break even because I had good risk management and good discipline. Isn't that crazy? I can blow 23 accounts and still be break even. Is there anything that separates the profitable and unprofitable? Yeah, definitely a risk management and sizing. I know a lot of people that follow my trades, they were full porting every single trade. And you guys are free to do whatever you want. But the way I want to teach and the way I want to trade this is to size in properly and not use your whole account. So I'm going to aim for 2 to 3 trades a day for the 1K challenge. So like I said, when I start with 1K, let's say I do 3 trades in one day. Every trade is going to be max $333. I mean, about. So that way, even if I like take a 20% loss, it'll be 20% loss of a third of the capital. Does that make sense? If I full ported and I take 20% loss, it'll be $200. Versus if I only take a third of my capital and take 20% loss, I think that'll be like about like $70 or something. And with options, especially if you're doing like weeklies, like you really don't need to full port. You really don't need to. I aim just for 8% a day. And even with my trades, like I think I was breaking at least 10% every day easily. I was like 3 times ahead of my schedule in like less than 3 weeks. 300 messages. Holy shit, I'm so behind. So you're doing 0 DTE or weeklies? I mainly do weeklies. Majority of my trades, I think, are all like I think half my trades are honestly all Apple and Amazon. We can go over. Let's see. We got Google, AMD, Tesla, more Google, Apple. And SPY. For SPY and QQQ, I will do 0 DTE depending on how confident I am in the trade and like what the trade bias was. But the only issue I have with that is I know a lot of you are going to be full porting. So for me, it's a little bit concerning because if you're doing 0 DTE, you should not be full porting. But if you do like 10% of your capital, 20% of your capital, sure. But I do like week. I think once my account grew, I stopped doing week 0 DTE. I think I started heavily focusing on like Amazon and Apple. Yeah, Amazon. A little bit of Nvidia here, Apple, and these are all obviously all weekly, so they had more time to play out. What broker do I use? For the 1K to 25K challenge account, this is Robinhood. For the swing challenge account, I'm using Webull. And the reason I do this is I want to separate capital between my trading strategies. I've said this before in chat that if you only have one account, let's say you're using like Schwab or something, and you have your long term, your short term, and your day trade account all linked to the same account, eventually you're gonna get like whispers in your head where like your brain is gonna tell you to sell your long term to start day trading more, and that's just a red flag, and it just happens naturally. It's just human psychology. So sorry, I got up there. Yeah, so definitely separate your accounts. My long term and my swing trade usually is all in Schwab. I use Thinkorswim, and then for the challenge accounts, I'm using Robinhood and Webull. Show the Amazon AMD trade reasoning you thought about the losing one. If I can find it. So for AMD, this was 225. So actually, AMD was a. I actually was happy taking this trade because it still was within my thesis of my trading model. But obviously, not everything works 100% of the time. So when I took this live, I was kind of happy that I can show people that not every single model is going to work 100% of the time, as long as you like know how to take like proper risk management and proper size, you can still trade to the next day. So let me find this trade. 225. Let's go. I think we were trading this on the 15-minute. Yeah, I still have it marked out here actually. So maybe this was the 5-minute. 1 second. $225. Oh, here. So for AMD, 225. AMD necessarily actually wasn't the best trade. Now look at it here, because on a daily, like we didn't have a clear liquidity sweep, but I think I was focusing on the 5-minute, and I saw this fair value gap that formed around 1035. So I think we took the trade near the retest of this, and I said I'll only get stopped out if we get a candle closure below this fair value gap, which didn't happen till literally like maybe 2 hours later at this candle. So this was probably the longest trade I actually took on this account, 2 hours. So usually if anything like takes longer than an hour, I think the trade is not going well for me. But if you notice these wicks, I was calling this out like live on the stream that you shouldn't be getting stopped out on these wicks. Always wait for the candle to close. And that was my reasoning to holding on to the trade. My thesis is not incorrect until we get a candle close below this. Right there. And yeah, I guess I could have maybe made like a small percentage or got a break even, but I trade based on like my model, so I don't even care if I take a loss. Did you get out at 20% loss even if it hasn't hit your stop loss on the chart? Well, I'm not sure what you mean by that. Like, you mean if the position is down 20%? Usually, like, my entries are pretty damn good. Even if it goes a little bit lower, I don't think I've had 20% drawdown. Like, this was the biggest loss I had, and it was 21%. And I should have got out right here, but I was in a meeting. I think I even called this out, actually. Yeah, I was in a meeting, and I wasn't able to close to maybe like after my meeting. So this should have only been like, I think like a 14-15% loss, and I got a little bit slippage here. So as long as, I think entries are definitely a lot more important than exits, because if you have a really solid entry, you can technically exit whenever you want, 1%, 3%, 5%, whatever. But if you have a bad entry, it's a lot more difficult to manage. Why Apple and Amazon? I mainly just trade the same liquid tech stocks, whatever is very liquid on the option chain. And if you trade the same stock over and over, you get a better feel for how it moves. Like if you strictly just traded Apple and you monitor all these time frames, you will get a better bias on how Apple specifically moves. Like this, Apple doesn't necessarily follow like SPY or QQQ. Even if like the market's dumping, Apple can be doing its own thing. So if you monitor just one stock and just check it every single hour and just like monitor the candlesticks, how they form, what's happening, the price action, you'll get a better feel for it. And that's why like later in the challenge, like I mainly start focusing on Apple very heavily. I think there was 3 days in a row I just traded Apple. And there's even one day I think we traded Apple twice in the same day. Use the replay function to walk us through a few trades. You guys aren't giving me any trades specifically. Okay, I'll go over one. 220. Let me go over one recent. So let's do this one. So this was on 228 on Apple. 228. So 228 was this massive wick day we had. Let's go on the 4 hour because the daily is not too clear. All right. So the 4 hour I like a little bit more. We swept these wicks on the 4 hour, and if you notice too, we also had a fair value gap here in the 4 hour, which we came back into and retested during that day. Around, this was between 8 a.m. till 12 because it's a 4 hour candle. So let's zoom into the 1 hour now. And I call this out 11:24. So let's see the 5 minute what I saw. 11:24. Wait, this is the wrong day. Hold on. Is it 28? 11:22. 11:24. Okay, I got it. All right. For this one, I think I might have been targeting the 1 minute because I don't see a fair value gap on the 5 minute. All I see is this little sweep that we had. So let me zoom in the 1 minute real quick. You know what? I just realized you told me to use replay. 1 second. My bad. Because this sucks. I had to keep scrolling. All right, it's right here. Okay. All right. Apple calls 235. So that was in the money. 11:24. So it was basically this candle right here. 0 DTE. And then I sold literally 15 minutes later. So on the 1 minute, this is what I would have saw. We had this fair value gap form after the sweep of a few wicks. I mean, this was kind of choppy, but as you can see, we took out some liquidity from all these points and we reversed here. And then once we closed above and formed this imbalance, this formed this 1 minute fair value gap, and we retested here. I don't remember if I was watching this here or if I just called this out here because I noticed it was gonna retap. But let's see what happens next. And then I sold 11:38. So that was right here actually. So I was probably just watching this the next area of sweep on the 1 minute. These two candles were actually, this candle specifically was the last candle to form this wick before it moved down. So if we got in at 11:24, that was about right here, you probably only had like a 1 or 2% drawdown, and that ended up resulting in a almost 12% trade in basically like 14 minutes. But I generally don't use the 1 minute. I look for minimum 5 minute and 50 minute. Also, a lot of the trades I've taken, like I'm extremely happy with small percentages. Like I know a lot of people are like, why did you close for only like 15, 10%, whatever? Because some of the trades I called out end up running like 50% plus. I think even early on, like I had like a Tesla and Apple call that both went up like 300% the same day. But that's just not a good mentality to have, to focus on large winners. If you literally just make 8% a day, you will hit this 25K mark in like less than 2 months. So I try to usually also teach how to scale in and scale out of positions. Like let's say I had 3 contracts here. Ideally, I probably should have got out 2 contracts at the sweep and maybe held one as a runner. But I've kind of just been so used to just scaling out completely and just taking my profits and just look for the next trade. But the smart thing to do is definitely just scale out and like leave a runner. So let's actually see what happens with this one. Yeah, so for this one, getting out completely was good, and because you would have been back a break even or at a loss right now. I saw your post on Reddit for people who are working. How is that going to work? Are you planning on posting trades on the paid Discord? So for the swing account, it's a little bit different. It's still the same strategy, but it's also heavily based on how the candlesticks close on the daily, 4 hour, and the 1 day, and the 1 hour. Sorry. So I used to do this when I was working full time. And if you saw my post, I mentioned. Let me just clear all of this. This is getting really messy. So what do you notice happening with these candlesticks? These are the daily candles. You know what's funny is I generally would have taken a small position at the daily close of this, and I still would have made more money. Do you know why? Because generally speaking, a bearish engulfing candle like this is almost guaranteed to retrace a little bit. I would probably expect like a 25% move, but this would have been, it's probably like a 15-20% retracement. And because of this gap up, if you would have bought call options at the day close of March 21st, and it gapped up $3, you probably would have made almost 100% buying calls here. I bet you're not gonna believe that, but that's honestly true. And then, so with that strategy, what I'm gonna be doing is I'm probably gonna call out any trades until after like 3:30, because for the swing trades you need a longer term, not longer term, but like a 2-3 day out, like a 2-3 day bias. So it's different than like scalping quickly. So for example, here in the queue, we had this 4 hour market structure shift. I probably would have just marked out a fair value gap that we got on the 1 hour. This is the 1 hour right now. So the minimum I'm gonna be trading is 1 hour. And this could have been your entry for either Monday, Tuesday, or Wednesday. So I would have said something like either in the money or like 490 calls, because that's very close. And anytime the price entered its fair value gap in the 1 hourly, I would have been like 490 calls, let's say expiration like Wednesday. So you have 3 days for this to play out. And then any gap up we have, you would instantly sell out market open, because you would be guaranteed like 10-50% just based on like the price action that happens pre-market. And if you look at it daily too, like this is now an area of liquidity, huh? So if you got in, do you remember what I said? If this would have been your entry on the swing account 489, your exit would have been above 493.2, which is about $4. $4 on QQQ on options. That's almost 100% if you're doing like short-term options. On a little bit longer expiries, this probably still would have been like 50%. But I'm not gonna obviously allocate 100% on every trade. It's gonna be between 25 to 33%. So maybe I would have called out like QQQ as one of the trades, and I would have said take like just maybe like 3 contracts depending on how much this costs, and then I would have checked SPY next. And by the way, like I can call this out early on today. Actually, this was 3 p.m. This would probably been perfect for people who are working full time, because they probably had like 15 minutes to enter. Because I could have marked it out and I could have called it. They can set an alert. I'll be like, when this hits its fair value gap, just have a limit order set. Or like I said in the post, you can honestly just enter a trade after the market closes. So let's say you can't get off work till exactly at 4 p.m. You have 15 minutes to enter positions or exit positions in QQQ and SPY. So yeah, your entry would have been a little bit off, but the exit would still work in your favor. So that would have been like one trade I would call out. And then I would have done like the same with SPY. SPY has very similar price action as well. And then maybe something on like on Amazon, Tesla, Amazon, Apple, anything else like that. So I'll probably aim for like maybe one ETF position and like 2 tech stocks. All right, I am 400 messages behind now, so apologies if these questions are old. Do you average down if you didn't get a good entry? It depends. So if we had a fair value gap that formed, there is 3 areas of entries that I would take. Let me see if I can find an example for you. So this is on SPY. All right, this is not the best example, but it's the one I see in front of me right now. No, let's go Qs. All right, this is okay. No, this is actually not a good example. I don't want to show this. All right, I'm just gonna make this up, but don't worry about the candlesticks. But let's just say we had a fair value gap here in the 5-minute, and let's just make this a little bit bigger. Ignore the candlesticks, and then I'll take my. So the first entry you can always have is at the touch of the fair value gap. The second entry can be at the equilibrium, which is 50%, and you can technically enter at the bottom of this too. But this one's a little bit more riskier in case the candle does close below and actually starts showing like bearish momentum. So the third one, I usually stay away, but it could still be a valid entry. And then if you take your starter entry could have been right here, like 1 contract, and then here it could have been 2 contracts. And let's just say you took this one too, it would have been 4 contracts. Your average entry would have been right here versus like, you know, if your starter position, because you're doubling down every single trade. But I generally stay away from the third one, just because if we do reverse and we get a candle close below this, then this becomes an inverted fair value gap, and your trade will be invalid. But if you at least just get, you know, 1 contract on the test, you can still have a play on the trade, but you obviously won't make as much. But you also won't have FOMO, so you won't feel like you missed out. ICT seems overwhelming. It's not. Why is it overwhelming? Like, okay, I don't know if this is gonna make sense, but literally just try to think like a market maker or like an institution. Like think like as if you're one of the big guys. They have a massive position, right? How do they get in and out of the market without causing huge changes of the price? What would you do? Like just put yourself in their shoes. You would find areas to manipulate retail traders, right? So let's say they had a huge bearish position they wanted to get out. I see this liquidity as an area to stop retail traders out. And when retails get stops out above these wicks, who's shorting this or getting out of positions? Someone's taking the opposite of these trades. Like at the end of the day, it's just retail traders versus big money. That's it. Whatever you want to call them, institution, hedge funds, banks, you can call them whatever you want, but it's just us versus them. That's really it. What are the 4 time frames in our charting? The bottom right is my longer time frame. I start on the daily, and then I bring it down to the 4-hour, and then to the hourly, and I leave it there. The bottom left is 30-minute, top right is 15-minute, and top left is 5-minute to the 1-minute. So this way, like, I don't get tunnel visioned in one time frame, and I can have a better trade bias just looking at all these time frames at once. If you see fair value gap on the 5-minute but not the 15-minute, will you take the trade? Yeah, that's perfectly fine. The best fair value gap to look into is after a liquidity sweep we get in a longer time frame, and then an imbalance we create afterwards. So let's see this. So we're on QQQ right now. If you actually look what happened, I'll even erase these right now. This just happened Friday. You can mark out these levels on the daily. Even this one if you wanted, I guess. So we swept out stops from anyone that had stops here and anyone that had stops here. Okay, so once that happened, let's look at the hourly. Hourly doesn't show anything clear. But if you look at the 30-minute, this 30-minute candle closed above the previous 30-minute candle. So this was a market structure shift. If you wait for confirmation, you wouldn't start buying here once the sweep happens. You wait for a market structure shift first. So let's go on the 15-minute and see what happens. Or at this point, you can look at the 5-minute too. All right, I don't see a clear imbalance of the 1-minute. Let me see the 5-minute again. So on the 5-minute, we actually do have an inverted fair value gap. So inverted fair value gap is when you have a bearish fair value gap form, but then the 5-minute closes above. So this would signify like a reversal. And as soon as this candle closes, you can actually just mark it in right here. Yeah, your entry would be pretty late, but this is a confirmation for me. And then your stop would just be below the open of that candle. So you would basically be risking, like, let's say you marketed here 484.73, and your stop would be like at 483.2. So that's about, let's just say 50 cents. But you would be targeting like the next sweep on the 5-minute, which would be 488, let's say 0.5. So that's a $4 move versus 50 cents. Do you see the risk to reward? So did I answer your question? Basically, like, wait for a liquidity sweep on a larger time frame, ideally the 1-day or 4-hour or even the 1-hour. Once we get some clear sweep, wait for some type of market structure shift. 30-minute, 50-minute, even 5-minute works. And then look to see what happens during the imbalance. Junes, didn't you ask me that question? What separates the unprofitable and profitable? I answered that earlier. It's basically just risk management and not full porting. I guarantee you, if I have if I have proper risk management, I can take 2 losses one day in one winning trade and probably still be up more than like the average retail trader. Because let's say I go for 1 to 3 risk reward, and one trade I lose, or I guess 2 trades I lose $100, and the third trade I win 300. I will still be up $100 in a day, even though I lost twice. Many of the people who work full time also have lunch breaks. I actually did forget about that. So maybe during like lunchtime, actually, I can like mention areas I'm looking at. With the way last week went, are you not concerned about insane volatility? Uh, Volatility is good for swing trades and scalping. The only thing I don't like is news that we have, which I usually avoid. So if we have um, predetermined news events like PMI or unemployment news, you can still trade those. You just gotta wait like 15-30 minutes afterwards. All right, give me 1 second. Let me scroll through these. All right, I do see a lot of repetitive questions. This webinar is being recorded, so I'll upload it to the YouTube after we end this call. Then your question probably be answered on there. Yeah. No indicators. Also, fair value gap imbalances. Those are like concepts, not really indicators. Do more replays as YouTube content. Yeah, I can start doing that. I mean, I only started streaming like a month ago, so this is still all kind of new to me. But I will try to improve any recordings to your guys' likings. Yeah, for the 3K account, those are only swing trades. They're not going to be day trades, unless we get some insane move like that particular day where we're up like a really good percentage, and then in my eyes it wouldn't make sense to hold. But since most of the trades probably will be called out to like around market close, they're going to be holds for at least 1 or 2 nights. been almost an hour. I think I'm gonna wrap it up. I'll try to start the stream tomorrow, like around 8 a.m. if you guys wanna see some future trading, and then we'll do options like around 10:30 as usual. And some information will be shared on the What You Learn channel if you guys want to stay posted on the community. But if you guys have any more questions, I'll call that a night. All right, take care, guys.